Good morning. It's Sunday, the 26th. We're going to run through some tickers that you asked for. A couple of things first. So this is the S&P on Friday. Hello. And we ended up here, and I always say if you have a position that is close to the money at the bell, close it, even if the bell rings and it's outside the money, because look at what they did after hours. They almost went, what is that, 70 cents. So if somebody thought that, okay, the bell rang and they were safe, they weren't. They probably got exercised after hours because they rallied. So it went from here to here. The bell, it looks like they closed at 395.75, and you thought to yourself, oh, I'm safe at 396. Maybe, maybe not. We'll see how it works out. Let me know if you're one of those people. So that's observation number one. And secondly, we have, I got, aside from when I asked for tickers, you guys also submit some comments. First of all, don't put tickers in the comments. They will not be picked up. I don't do it manually where I bring it in and it does its macro. So if you put tickers in the comments, they're not going to be picked up. Start another entry. A lot of people do. Okay, so one question came. Can you tell me your favorite stocks for mid and long-term investments and why? What criteria do you use? I tell you every week what's on the hot plate for me. I told you when to buy Amazon stock, for example, because it was super cheap. If you did, you made quite a bit of money. And when Bitcoin was super cheap, BITO, which is anybody can buy BITO, you don't need a Bitcoin account. I don't have a favorite stock. Is whatever a good stock falls into support and has no events coming, I would like to get long. However, I get long by calls, by shares, sell puts to own calls, sell put spreads. And I don't have a standing favorite stock. So I share everything with you guys. I don't hold back. And if you pop into the live room or converse with me in the chat room of sorts, I would tell you what they are at that point in time. And then somebody saying, okay, ideas for long, short swing trades. Again, I do that almost every day. I send a note in the middle of the day. If you don't get my notes, you're not using my service. So I post those notes everywhere. If you're on email with me, you get them in email. If you're in a chat room, you get them in the chat room. And I'm not talking about the live room. Not everybody can go in the chat room. But if you have this video, you got this video somewhere. Wherever you got this video, there'll be a write-up. And if you're in a chat room, it'll be posted there. So look around for what's already available. You're missing out if you're not. Let's see. Looking to sell some credit spreads in stocks, primarily in AMD and UNH would buy calls and puts. I'll get to those. I don't like to sell put spreads as the stocks are rallying to high heaven. I think it's too late. I'll address Amazon and Qualcomm when they come, and McDonald's. Somebody bought a bunch of calls on 4.6 and 4.21. 4.46 and 4.21 expirations on Friday. First of all, I would not do that. Buy a whole bunch on one day and buy a whole bunch that looked like the same. In fact, I see already a mistake. Apple, I assume you typed the ticker wrong. Hopefully somebody else asked for it. So I wouldn't do Tesla, Nvidia, Apple, and Amazon in one day. That's, to me, is too much conviction. What do you know that I don't? Because you should have told me if you knew something so I can go along with you. I wouldn't do that. I would take a partial position in one, maybe two of them, and then add later. If it starts moving my way or against me, I will add at appropriate time. So, okay, I hope it works out because I want the market to go higher. And those are comments. Let's see here. How much protection do you need? That's another question in this crazy market. And they said, I wish I had bought some VIX calls when you suggested. Okay, so for the next time in this environment, when the VIX falls to 18 and you need protection, it's called renting protection because the VIX is not going to fall much below 18 in this environment. So if you buy calls 60 days out, they're going to hold their value really well. And then within the next 2 weeks, you can decide whether you want to let him go because you feel better about things, and it'll be partial gains or losses. To buy, and the question, is it too late? It's never too late to buy insurance, almost, but it is a lot more expensive to do it now, and you may lose the value of your protection a lot faster if nothing happens. So if you think you need protection, the world is a shit show right now with no leadership. Everybody's doing whatever the hell they want, so they can do whatever the hell they want, and we're in danger of those repercussions. We don't know what leader where in the world is going to be in their bonnet and do whatever they want. So if you think you need protection for your assets, you're entitled to spend some money on insurance. How much? Not 1-to-1. If you're worried totally about your entire collection, you should just get out of everything because it becomes very expensive. But I could either buy calls out 60 days, but now they're more expensive, but still will work in the VIX. That is a blanket protection against, holy crap, something happened. Or buy a put in the S&P. That's super expensive and does not hold value as well if markets start rallying. They get shellacked. A debit put spread works a little bit better, but not as well if an actual correction happens, crash, because it is limited. So if I spend $300 on a $10 wide debit put spread in the S&P SPY, for example, SPX or whatever, that gives me $700 worth of offset. So I would gain $700 for every $300 I spend. How far out in time? About a month, 5 weeks. The spread is going to cost about the same. So why not get some time on the clock? Those are ideas. Nothing is foolproof. If a market correction happens, you will lose money if you're long assets, and you will lose less money if you have protection. Let's see here. Another question is, if you buy a stock and now is in a downtrend, like Schwab, that's exactly what they said. What is the thought about selling calls on a downward move? I wouldn't do it in Schwab because it's not a downtrend. It fall off a cliff. So that cliff makes it impossible to sell a call that wouldn't get you out with losses. So I would not do it in Schwab. I would determine whether I want to own these shares or not. I personally went long Schwab last week. I sold puts on a bad day. My thesis is that the insiders are buying. The CEO bought a whole bunch, risked a whole bunch of their money. I'm comfortable if the insider knows that they can spend millions buying shares. I don't know how much they spent, but it was a significant amount. I would trust them. I don't know anything you don't, so I threw a little risk at it. I would not sell calls after a stock has been demolished. If I buy shares, I would sell calls immediately. Covered calls against those shares. Okay, so it's a one-off. If you want to reach out to me on specifics, I can help out with that. I think those were the big ones that stood out. All right, so let's tackle the actual tickers that are at hand. Okay, somebody else did ask for Apple, so you're in luck. You're misspelled. It did not damage you that much. Okay, 15-second charts, by the way. Let's switch that and go here and jump into AA. So Alcoa, I don't know much about their fundamentals anymore. From a chart perspective, this is a daily chart, so about a year's worth of data. We have support, but it's scattered. So I feel like this is the story of the whole market. If you go along here, you're betting the market will bounce because Alcoa is trying to hold support. October support, and what we have right here. So if there are no earnings coming up, if you believe the markets will hold, I guess this will be a good one to own. If I own it, I'm not panicking now. It's too late. And if I go to 60 minutes to see, yeah, if they lose this level of support, I would think 38.50. They might drop another $1.50, maybe. We'll see. Apple, clearly it doesn't have any issues all by itself. Look at this. This worked out. I free-handed it. Okay, take that out. So they broke out, and they've retested the breakout neckline. And so Monday will be this versus the breakout area. You have buyers into 156 and 155. And you have a trigger above 162 and change. And neither have, like this one has no recent fails. So if they do break out of here, it's probably a little bit easier to cruise down this open air section. I mean, it's not open air all the way, but you have to go back far versus having recent supports. So I give the advantage to the bulls, buyers on dips for this period of time. So this is just a 1 hour chart. If I go to a daily chart, let me explain the breakout here. This is a bullish chart in normal circumstances. They just broke out from this area. If they can close at 160 at the end of this week in Apple, I would give them the advantage to get to 168 or 70. I know that sounds crazy because that means the markets are rallying hard. But I don't have that conviction. I had a big if before that statement. If they can close above 160, 58, 59 this week. In other words, if they close above these two red zones, which have been in contention for a while, it's a confirmation of a breakout. And the upside potential of that breakout can be significant because of this rally. I'll cut it in half. So it can be $8 to $15 from here. So it can get to this area. Now, that is looking forward. It started with a big if statement. I don't know how the futures will open tonight. I haven't been listening to news. The world is a crap show, as I said earlier, a mess. So we don't know what kind of headlines we're going to face next week. We'll see. But this is a bullish breakout on a daily, right? There are a whole bunch of things to look at shorter period of time. But basically, if Apple holds this level within $2 by Friday, it has upside potential, which speaks well to the market. I know it's crazy because everybody feels the worst right now, including me. I'm very upset at the world, but I will have to look at the charts just from the charts perspective. Okay, so here's AbbVie. Good rally, good bounce, going into a problem area, 160 to 162, the opposite of Apple. It's going into a prior breakdown. Apple is above a prior breakout. This one is going into a prior breakdown. You can see it. Around 160 to 162, there's going to be a lot of sellers. NVIDIA went through it. I don't think that was right, and that's what scares me about the whole market. This one may be able to do it. I don't know. They do have higher lows. They do have a big battle ahead, so be careful. If I was long as a trade, I would be lightening up into that area. I don't want to touch anything with real estate, nothing. However, there are some experts out there that believe that Powell has to cut rates in June. I think that's crazy. If he does, I'd be worried. What does he see? But if he does, maybe real estate comes back. So, I mean, they just lost support. They're losing support. They need to get back to 12 is what they need to do, technically. Otherwise, they could go to 9. I don't know much about the company. It's probably a REIT. Pays 14%. Yikes. Okay, so that's pretty scary. I don't trust anything that pays 14%. You're speaking to somebody who was doing business with mortgage companies in 2008. New Century was paying 20 or 25%. Went bankrupt overnight, and that was the end of all real estate business that year. So I don't know anything about this company, but anything that pays 14% yield, too good to be true. So just be careful. Anyway, be careful. I don't know much about the company. Technically, they need a bump to 12-ish and quickly. Affirm. I am still long Affirm. The business is good as a business. Now, the environment might not be ideal for them. Everybody's scaring me about the debt levels in the U.S. and people being afforded and whatever. Clearly, if we do have a crisis at the consumer level in the U.S., this one will be in trouble. So I shared a trade setup where I sold a put at $10 and I said, I want to own shares. And I believe I collected 70 cents or so. I'm speaking from memory. Let me explain what that means and what's my risk, okay? So if you followed me into something like this one, let me explain to you what's at stake and why I'm not panicking yet. When the stock fell to 9.7 or even 9.3 this last 2 weeks, if I had woken up, so first of all, when I sell a put, I'm telling somebody I will buy your shares at that level. And my level was 10. And now if I collected 70 cents, so I would wake up owning shares at 10. And if it was here, the worst case scenario in this last couple of weeks, I would have broken even. Why? This is about 9.3. I collected 70 cents. 10 minus 70 cents is 9.3. If I had woken up owning shares, I would immediately sell the shares and break even. That's one way to trade it. Or if I do like the company, I would just keep the shares and start selling calls, and I would be profitable immediately, short of the stock cutting cut in half. Okay? So that's why I don't panic, because if I wake up owning the shares at 9.3 and I sell them, then I broke even. Right now, if they give me shares at 10 or 10.3, I would make immediate money. So I pray that they assign me, but they haven't. So we'll see how that trade works out. If I'm nervous about it and I will have to buy the put back, I may lose a little bit of money. I haven't checked at how much it is right now, but that's my situation. AI, I wouldn't touch it because it is a headline stock. Buyout, not buyout, buyout, not buyout. I think the guy that started the company is looking to sell it, and he is probably successful. He's done it before. So from a stock perspective, super big failure, huge bounce level right in the middle. I don't know why I would go long or short. Failure. So if you take 26.5 or 26.8, let's round it to 27. If you take 27 out, maybe you get the 30 again. If you take 30 out, maybe you get the 35. Technically, I can explain all of that. Why is it going to rally versus fall? I have no clue. What if a headline comes out and says, no, there's no buyout on the table? The stock could be 17. I don't know. It was in January down there. So be careful what you're trading and what you know, and how do you think you have an advantage over your opponent? Who's your opponent? The person that takes the other side of the trade. So no, Shannon, I don't have time these days to make these spreadsheets. They take hours. I apologize. One day maybe I'll find a way to do it, but until I get more efficient, sorry about that. Okay, Albemarle or whatever. So the comments on the chart still are valid. You do have a potential catalyst to get up to here if you take this out. But that is a prior fail, so it is resistance for now. And you must hold, otherwise that blue arrow comes to fruition. So it's fighting for its life. It's stuck between must hold support and huge resistances above. I don't know what that is, so we'll skip it and we'll go to applied material. Okay, so applied materials. I don't remember what their business is like now, but I'm assuming that the business is fine. You have an opportunity area around 126. It's a prior fail, but that would be the catalyst to jump up from there. And you do have a decent support short term. So I said it was vulnerable, and it played out somewhat. It could bleed down to 114. So the closer to 112 it is, the better it is to get long for a swing trade opportunity back to 122. So this is the short-term perspective. Long-term perspective, I don't like this. So 126, yes, it's an opportunity, but look at what they have to deal with up there. The ranges are so wide on this one. I didn't think it was that volatile as far as P&L. That's pretty bizarre. No, it's super stable. So market makers are in control of this, and they're going to yank you around. So whatever position you take, you better have a strong stomach and tell them, nope, you're not going to get me out of my shares because of this, or no, you're not going to get me to chase because of that. I mean, use the fundamentals of this company. They seem pretty stable to manage your emotions. AMC, I'm all in. I think the business is fantastic. No, I'm just kidding. I think this company is going out of business and they don't even know it, unless they change their ways. The SEC at one point, they're going to come down on their necks and say, what the hell are you doing? What they did is the splitting off AMC. This is the same AMC, right? That split off with Ape. If that's the case, then be careful. Management is crazy. Support at 4. If you lose 4 or whatever this number is, Nick will get his headline. AMC filed for bankruptcy. Blah, 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 blah. Anyway, this is a momentum, a meme stock. Don't short it with conviction. And if you do short it, please use finite amounts of money. For example, never sell a naked call, not even for a second in the stock. I kid you not. Don't sell a naked call in this one, not even for a second. Covered calls are fine, but selling a call when you don't own shares, the first rule for me of taking risk is knowing what the maximum loss is. When you sell a call without owning shares, you don't know the maximum loss. You say, oh, I'll put a stop. You don't know when you're going to get filled on that stop. I promise you. Here's a scenario. You put a stop at 5. You put a stop at 6. You short at 5. You say, oh, I'm maximum, I can lose $1. Okay. Price spikes through 6. Your order flips to live order. The company gets bought out and it's $15. How much money did you lose? Okay, so you don't get filled at 6. Your order goes live at 6 and you get filled on the next available trade. It might not be available, so you don't know where the maximum payment is. Trust me, that's why short squeezes happen. If you got caught with GME, you went bankrupt. Don't do it. It's not worth it. How do you short a stock responsibly? You buy a put. That's the maximum you can lose. You sell a call spread. That's the maximum you can lose. Thank you, Echo. You sell a covered call. That's okay with me. But the traditional way to short stocks is you borrow shares and you sell those shares and you put the money in your pocket. And then you owe somebody those numbers of shares. So if Ed has 100 shares of AMC, I'll say, hey, and I think it's going to go to 0. Give me your shares. I'll return them. I borrow his shares and I sell them and I put the money in my pocket. AMC gets cut in half. I buy them back with half the money and return the shares. I kept the difference, but the opposite is pretty painful. So has support. Support must hold. Otherwise it goes to 3 or lower. Has an opportunity around 5. You might get to 550 or 6. It's a trading stock. It's a meme stock. You have to be in the live room. I would help you trade it. AMD, somebody wants to sell a credit put spread. Not for me. I don't like to sell a credit put spread chasing a stock that just ran this much. This is a harmonic on a daily chart. That's a bearish setup. It's not foolproof, but it says it could go down to 90 before it rallies back and takes that 102 out. I have to tell you, that level, you can see it right there. In fact, I might have lines for it. So you see that arrow? Okay, that was my downside scenario from up here, and it almost came to fruition. A lot of it happened because of this zone. They tried to recover it. They went to 108. They failed. They went to 104. They failed. And here they are again. Let them fail a little bit. Buy it on a dip. If you twist my arm, okay, credit put spread would be the way I would do it. But that assumes the markets are rallying. So ideally for this guy, what you want to happen is have a small dip, approach 90. And if they go lower than 90, that's fine. And let them take it out again. You take my neckline out. I give you, 130 if you want it. But it's better to do it after a dip to consolidate. So this path is available. It will need the market-wide rally to happen. Small dip, if the world is not falling apart and we don't have World War III or whatever schmutz storm coming our way, then this could be the way. The closer to 80, the better. 90 is fine. If it comes down to 70, in fact, I'll put my alerts. I would engage. If you lose 50, you will go down to the 30s. What? Hey, the pandemic happened. We didn't know it was coming. It went down to the 40s, and I sold puts at 20, and somebody paid me more than $2 for them twice during the pandemic year. So you don't know what you don't know until it happens. Stay open-minded. Don't go all in anything. Never go all in anything in this environment. Leave room to add. Amazon is one of the stocks I like. Starting to worry me a little bit. Because of what they're telling me about the consumer, because of what's going on in the world. However, look, the dip happened. I drew this for AMD in front of you. This is available for Amazon. The closer to 94, the better. If it falls into 90, yes, I want to be long. So I'll put an alert here. And I'll put an alert here because I want to be long into these. So when they fall into my lines of support, I would be braver selling put spreads. So I'm not chasing blindly. Whatever the markets will do, Amazon should do the same. But you have to keep in mind that Amazon is the second largest employer in the world. Okay, so if we're going to have an unemployment problem, they're going to be suffering. What is this? Okay, so this is not good news that they fell below 275. It looks like they can bleed down to 255 or lower. Not straight down. A rally into 275 now. A rally into 275 is going to hit a support resistance zone that extends about $5. So I would, if you buy dips, I would offload on rips. So they are selling rallies. Look, rally, sold, rally, sold. If you get long and you get a rally, I would exit. Taking this out may get you to here, but that is a lot to cut through. 280, 282, 275 is going to be difficult. Okay, that was your Apple that was misspelled. All right, ARK F. So this is a company that's hated. ARK is ARK Investment with Cathie Wood. She's been famous for calling the Tesla breakout. I made fun of her on Tesla, but she was right on Tesla and probably nothing else. So stop investing like Cathie. Cathie's investment strategy is horrible. To have it as an investment strategy for the average Joe. They like innovation. If you go to their website, I've said it a million times, go to their website. It is what not to do with your money. I'll tell you why. It is what to do with a small part of your money. On their website in like 72 font, we solely invest. That statement right there. Nobody tells you to put all your eggs in one basket. She said, put all your eggs in one basket. We solely invest. That is a horrible idea. You shouldn't solely invest in anything, even if it's a sure thing. That's part one. We solely invest in innovation or disruption, or whatever she calls it, which means we put all of our eggs into the riskiest basket there is, because innovation is something that will work in the future and has nothing going on for it now. It is vision and guessing on the future. Now, that's good to do in a small portion of your portfolio. If you have your entire portfolio look like Cathie's, you're either eating caviar or just shoveling schmutz off the floor. There's no in between. It's either a home run or nothing. So that is not a way to do business. If you're 20, fine. If you're over 30, I don't think it's a good way to do business. But ARK F is their financial ETF. It probably has a lot of financial tech in it. So if I'm long Square or PayPal or Affirm or SoFi or all four, I shouldn't touch this because I'm already long this. I bet you it's all kinds of stock that looks like that. So make sure it balances, it fits. Now that stock in particular has a buyer here and a seller there. Ping pong inside those zones. If you lose this one, you're going down to 14. If you take this one out, you're going up to 20.5. So ping pong inside. What does that mean? If I'm long here, there's nothing to do. If I'm looking to get long, I'm guessing up, not down. So if I get long inside of this zone, it's better. If I offload my longs here, I'm trimming. So ping pong as an active trader inside of that. And if this breaks out or this breaks down. Now, if you want to invest in it for the long term, take a small position. You don't want to time it perfectly. Take 1/3. Leave room to add. That's the only way you can go back in time and fix your entry, by making it at a better spot. If you go all in, you said to yourself, I know this is going to go up from here. If not, I'm okay losing money. I'm never okay with that. So if I wanted 50 shares and I only took 10, I know I can double that, and double that and be fine. So ARK, every comment on ARK F goes here. The stocks, like I believe Tesla is in there, a big portion, and a couple of other stocks are big portions. So the top 10 stocks are about half. So go study what's in those top 10 and see if you have them already individually. If you do, don't do this. If you don't, and you like all the stocks that are in it, then do a little bit of this. So technically, it's inside of a range, ping pong between 40.5 and anything into 35. If I get long into 35, okay, long with stops or half long, like long and leave room to add some more at 25. What? Yeah. If they lose this one for whatever reason, market correction or not, this will be in the low 20s again. So we don't know what we don't know. We know for now we have a seller and a buyer. Ping pong inside. ARK. But it's the same company. ARK Invest. ARK, ARKX, ARKF, ARKG. And there's probably one more. I don't know. I don't know what this is. So let's zoom out. Woof. All right. So this is a stock. Don't care what the company is. Wall Street tells you they hate it. Why do you keep trying? If you're stuck in it, study the company and decide whether you want your money to stay in there. The chart, there's no help from the chart. If you make decisions based on the chart, you have hope. The hope lies in you studying the company. There's no income and nothing but spending. So just what is this? Clinical stage. Okay, so that is definitely a gamble. The charts is no importance. AstraZeneca. I have never traded AstraZeneca. Well, I have in the past, but I haven't for decades. So small buyer at 62, better buyer at 56. If you ask me where to get long, I think it comes down to 56. Especially if they lose this one, they go straight down to 56. And after a bounce, I would get out, because if they lose 52, they go down into the 40s. I don't know much about their fundamentals. Taking that out takes you to like 80. So study the company, study the prospects. Are they a vaccine company? I can't remember now. Engages in research, development, manufacture, commercialization, prescription medicines. Okay. So study them fundamentally. Technically, they're stuck between a seller and a buyer. And if you take this one out, you go to here. If you take that one out, you come back down to here. That under 58 is a better entry point than here, with conviction, with stops. Because if you lose 52, the September lows, I think you go much, much lower. I don't know which way it's headed. So trade it. Bank of America, if somebody believes that the banking crisis is over, Bank of America would make for a good knife to catch. I don't know why it would stop before hitting 22. That is a statement, because technically, here's a stock that went from here to here, consolidated, and lost the consolidation zone. Technically, they have to go this far from here. So I'm going to put like the visual to it. This is not a forecast. This is an estimation of how low they can go. And that is a great spot to be long, under 24. Okay. I went long a few banks. I went long the riskiest ones, like a nut job. So I sold some puts in Schwab last week because I'm betting on the CEO being correct. Before that, I had a momentary, excitement level, and I sold put in FRC, which is a all or nothing. So when I sold the put in FRC, I expected my money to be gone. I accept the zero risk. It could be gone, like from 12, and I would break even at 10ish, I think. So I'm on the hook for $10. We'll see how that works out. Bank of America is a better bank to gamble on because it doesn't have that will it be out of money tomorrow. However, if we do have a run on the banks for whatever reason, if people freak out without the leadership, and we don't have leadership right now, if people freak out without leadership coming out and telling us, listen, stop your panic, your money's there, I'm going to backstop everybody, and no bank is going to go out of business that is top 10 in the US. If they can say it, then this is fine. If somebody freaks us out, and it's easy to spread bad news these days, fake or not, people go to get their money out of banks, the banks will have a hard time surviving, even banks as big as Bank of America. If you go down to the bank right now and say, I need 20,000, you will not get it. And that's on a good day, on any day. Crisis or not, you will not get it. They'll say you need to give us X number of days notice and make an appointment. You come down and pick it up. And you have to file all kinds of paper. And you're thinking to myself, that's my money. Well, that's the banking system. So the banking system exists calmly if people are calm. When people panic, we have issues. So if the markets are rallying, this stock is rallying, and vice versa. If this stock is rallying, then the markets are rallying. So it might be better to invest in the SPY. Boston Scientific, that's a pretty good stock, but going into, it looks like a wedge. I'd be more comfortable buying it into 44 Even if this is this an all-time high? No, doesn't look like it. No. Okay, so yeah, this is 2004 area. There's no way you can get me to chase this stock here, but it's breaking out. Yeah, I missed it. Bye. This is what I would say. If you're enticed, then just plug your nose and own it. I think it's a better own around 44. And if you lose 46, you'll probably come down to 42 or 43. Get it long there. So at least take the breakout from here. BX, you could convince me to go long by selling a put spread or selling puts to own shares. You could do that. We have lower highs, higher lows. This is the story of the SPX. You have buyers. Oh man, hold on. You have buyers below and sellers above, and it's like they are trying to snap out of it, right? So here's what happened. I shorted it as an idea recently with you, and based on this. This is a pattern that keeps repeating itself. This is an exact pattern from prior time, moved it, and it delivered profits. I said, let's go short on this one. So now I moved it over to the right, to the right, and saying, what if it repeats? So you can get long, but if it comes up to here, you should get out. So credit put spread, yes. Buying shares, yes, or calls, yes, call spreads, yes, but I would book profits into 90, or if I'm patient, maybe into 96, and then get out and flip into puts or put spreads. Okay. CAT, pretty risky trade. Rallies, I think, will be met with sellers around 236. I don't like having the weak point below. If you twist my arm to trade it, I'll probably do another iron condor, but I personally wouldn't. It's a pain in the, you know what? We did win with it, and I don't want to risk it again. So there isn't an easy trade with Caterpillar here. If the world's going to hell in a handbasket, nobody's going to be renting or buying Caterpillars to build anything. So be careful with that. On the other hand, if the people are going to buy all kinds of batteries, we're going to have to mine for those batteries, and that's what they use. Big gas guzzling, diesel guzzling equipment. So you think the electric vehicle is pretty easy on the environment? I disagree. The footprint of the electric vehicle, if you trace it to the mining, is probably the same as the regular fuel, minus the destruction of the planet. So, you know, that is another debate. CHD, what is this? Church and Dwight. Okay, so it has a breakout level right there. It looks like it's easy, but it just looks too easy. However, it is there. Above 87, it could run another $5. Don't be short. And the bulls have the advantage of momentum. And if it doesn't go out this time and it dips, the buying opportunity would be to buy it on the dip. Where? Into 84, 83, 82 for sure. And then hold it and see if they can roll back up to 86.5 and 87 and burst right through. Okay. CareMax. Don't know what that is. Yikes. Okay, same comments. The Wall Street hates it. Why do you love it? So convince yourself again, why do I love this company? If you're stuck in it, you're going to have to decide. It's a micro cap, it looks like. At least they have an okay P&L, it looks like. However, for some reason, Wall Street hates it. So if you own shares, hold on to them and see if you're right. If you're looking to own shares, get some, not all in, and based on your thesis. I don't see anything in the chart that says hold it because Wall Street hates it. If I'm holding it and it rallies to 4, I would get out unless it's an investment for the future. Coin. Wouldn't touch this with a 10-foot pole, and I told you why. Because you have coin headlines, and then you have Bitcoin headlines, and then you have market-wide stock headlines. Well, guess what? It got hit by a coin headline last week, some sort of an investigation from the SEC probe. Bitcoin didn't do this. Did it? Maybe it did. Anyway, but you know what I mean? If Bitcoin dipped with this one, it's a temporary dip because the coin headlines are not going to move Bitcoin in general. If coin goes above 87, it goes to high heaven. I wouldn't touch it. I'm invested in crypto, would much rather make money off of crypto, so I'd avoid that extra level of coin headline. This is a support zone because it's been well consolidated. So they can hold it, they can get back to this area. Above this area, it's a breakout. If they come back into 50, it would be even a better entry. So let me walk you through this here. What the hell is this? So sales went from here to here. Losses are piling up. What do you like about it? What do you like about it? It's a horrible P&L. So make sure you know what's going on in here before you add to your risk. Just study the actual P&L of the company, their cash flow, the number of active users and all of that. That's super important if you're investing in it. Costco. Above this zone, it goes to here, but that doesn't look that easy. But it is a legit breakout if they can do it. So if I'm long, I'm locking in profits and hoping they break out. If I'm looking to get long and you buy calls here, or you buy shares, you're betting on the upside. Maybe it comes, maybe it doesn't. If it dips into 480 or 84, yes, it's a better entry point, because just like the other one, if it dips, it should find buyers. It could curl back up, and if they take that out, boom, and then you're long from the dip. Where in the dip? It doesn't have to be surgically good. Anything below 488. CRM, same, except that this looks pretty tough to take. If you force me on CRM right now, I would sell a credit call spread. They do have buyers below and sellers above. Buy the dips and see if you can curl back up. Buying now shares or calls or call spreads, you're guessing that they're going to take that out. I mean, it's not that obvious. It could happen, but it's not that obvious. Good company, though. CrowdStrike, better on a dip. Sellers into 140, buyers into 124. That's a fact, Jack. 142.5. Look at that. Okay. This is a Fibonacci area of interest of sorts. I don't remember what extension. Nevertheless, it is right here. So it is resistance, natural resistance. Buy into the dip if you're looking to get long. Cisco. This stock amazes me. The company is fairly stable. Look at the sellers that are waiting. That big red box is a bunch of sellers. So if you twist my arm, I would do a credit call spread and a credit put spread, but I wouldn't do that. This stock is too boring for me. Buying a dip into 48.5 makes sense. Losing 48, you'll probably get a better entry around 46. That would also be a good entry, because this is a cranker of a company. There's nothing bad about it. It's just a matter of why is it so active, the stock, when the company is not that vulnerable. Okay, what is that? All right, so this looks like on a daily basis, this is a support zone with buyers below. It's not a bad place to have started longs into here. Stop out if you lose this one. I think that's way too far back to count on. You could enter it in the 19 area if you lose that. But it looks like the buyers are here. And hopefully you get taking this out to get you to up 31. That being 27, 26.5. This is still available too. So sellers, look how truthful that was. They're still there. And buyers below. CVS. All right, Bill. A stock just lost footing here. The target of that is probably this, but now it's in free fall. So the support is zone-wise. You do have support, but it's scattered into 68 and maybe into 60. So I wouldn't get long. It's in complete free fall right now. There are sellers into 75. In order to get the green light short term, I would need to see them take out 76 and change. So maybe you'll get $2 to $3 rally today. I mean this week. If you lose 72, you're probably going to lose another $2 on top of that. DAL. Okay, so from a trading perspective, I don't believe in any fundamentals that any airline has to offer. They're all crap, fundamentally. They don't know how to run their businesses for some reason. This drop, consolidated, another drop. So rallies into 33 are going to be met with sellers, and they probably are going to bleed down to 30 or 29 and a half. They do have a buyer here, and it was a sharp buy, but it's been a while. So if you're a gambler or risk taker, not a gambler, it is a calculated risk to be long here. I would, if I get $2 out of it, I would exit if it was a trade. If you're looking to invest in it, then just do your thing. It's not a bad entry. I wouldn't go all in. Deutsche Bank. Why? Why on earth would I want to bother with that? I don't know anything about banking outside the US. And what I know about banking inside the US is also in jeopardy because I don't trust anybody anymore. They told us the banks were bulletproof, and now it turns out that hundreds of them are not. What? So screw you, your regulators. I don't trust you in the US, and I most certainly don't trust you outside the US. Credit Suisse went under, basically. They salvaged it. Yeah. I don't know, they salvaged the account holders, not the stockholders. So I wouldn't touch this with a 10-foot pole, as they say. If I was to risk something on banks, I would risk on a giant pool of banks in the US, like the XLF, or maybe even the KRE, which has, I don't know how many regional banks in it. For me to go outside the US and invest in Deutsche Bank, it would take some fantastic story and convincing from somebody. This is support, but the business is in question. So, not for me. Please, be careful. Datadog. Okay, this is almost like CVS's scenario. It has support, but it's so far... I mean, if you lose this support, what do you got? Oh. So if I'm long Datadog, I would not add. If I'm looking to get long, I would not go all in, and I would put stops. Look at the area where they're failing, into 90, and let's zoom back in. If they lose last week's low, I think they go to, 60, maybe 58. And the rest of it is way too old for me to rely on it. All I know is they're selling rallies. So if we get to 68, you can bet they're going to be sellers. If you want some relief, take it above 70. Then we'll talk. Maybe 75. Okay, let's see here. What do we got? Deere. Same comments about Caterpillar. We're going to need food. John Deere is where it's at. Very ginger support. I think you lose 381, 380. You can probably lose $15, $20 quickly. You do have resistance support, but it's scattered, very scattered. See, my box is buyers down here. So for now, they're selling rallies. Respect that. So if it goes into 400 and you're long, I would exit. If you're above 405, then you have some breathing room. Disney, you saw my trade, sold a put spread, crossing my fingers. It was a descending wedge. It hit my target. That was my target from weeks ago. Look how close it came. That's when I opened my risk down here. So I'm in danger until this expires. I can't trust rallies. I can trust support to a degree better than rallies. And even then, so this is what I went long against. And this was the pattern that I was expecting. And it played out almost to the penny. Okay, why did I take this pattern? This is what happened on the last rally. Copied it over. Get above 98, you can probably get 104. So you do have support and support below support. And then a trigger at 198. Devon. Okay, so let me share my target with it and how it performed. My target came to fruition. Now you're free to buy the dip. And if it does rally, I think it'll find sellers into 56, and there's in danger of it going to the 30s. What? Yeah. So you see that hump here? It could repeat itself. So what I'm saying is that there are sellers into here. And this may happen. And if it loses wherever it bounces from, it's going to come down to the next level of support, which is somewhere around here. Now, get this. So oil companies, energy companies are in favor of everybody on the planet except Nick. So my thesis is against everybody else in the world's thesis. I'm not that smart, so don't trust me. I'm telling you what I've been right about so far. I haven't put a foot wrong in oil except for one put on Exxon one time, which wasn't big enough to offset all our profits from oil shorts. I don't hate oil. I hate the concept that they're selling me on that we have an oil problem. Companies are great. Devon is good. Exxon, Chevron are great companies. I can't speak to Oxy, but of course you leverage the homework that Buffett is doing on it. You have to assume they're good. I'm shorting the idea is that we don't have enough oil to go around. Well, I challenge that, and we'll see who's right in the end. Meanwhile, I'm super right about Devon. The rally into 56 or 57 will be met with sellers, and if the sellers are hard enough, bring it back down to 44. Lose 44, you will end up in the low 30s. That's my forecast. So what does that mean? If I bought the dip, I can make money, but I should get out on rallies, not assume it's going to go back to 75. That's what I mean. That's it. I don't mean to short it. I just mean to be careful that a rally is not going to take you back to 80 and above. I don't think so. I could be wrong. Okay, who is this? Nice bounce. I think it has sellers 13 to 14. And then if it falls into the same buying zone, good buyers, they stepped up several layers. Yes, the scallops. EQT. All right, so descending wedge. I can tell you there are sellers on rallies on the daily chart. If you take out 31.5, you could get to 33.5. If you get up here, I think it's going to fail back down. How far down will determine your next situation. So far, they're in the hands of the sellers. They're selling rallies. Don't assume this is different. Don't assume this is a bottom. People assumed it here. On the rally, they didn't go out, exit. They came back, made a new low. People assumed it was here. They didn't get out, came back, a new low. People thought it was here. They came back, made a new low barely, and here they are rallying again. Assume the rally will fail at 32. And if it doesn't, kudos. Okay. Assume it, and then you're safe. Okay, bounces can come. Sellers at 12.20. So if the bounce comes, I think there's a chance that they're going to sell it off. And then what? Stop here? That's the question. Or, continue on lower and then bounce and then lose this and then finally rest here. So this is the scenario. Is this it? That's the question mark. Or will it bounce from here with some relief? So the question will be inside this area. There's going to be a decision to be made. Manage your risk accordingly. Ford. I don't like Ford's prospects. They're not making money on EVs. No one is except Tesla. So if they continue insisting that they're going to be a completely EV company, I think they're going to struggle as a stock. If it goes to single digits, I'll take a bet on it. Right now, you can bet on this floor. If you lose 11 or 10.90, I think it goes to single digits quickly. So you might be able to buy it at 8. So if you want to invest in it, start a position. And don't make it all in it. Make sure you can double it and then some, just in case. Can you sell puts to own shares? If there's enough premium, that would be the better way to do it. This way, it gives you some buffer zone. Of course, you don't participate to the upside, but you can, sell puts and buy calls. You can do that. I don't like it. Technically, I could explain a rally to 1240 or 1250. So it can go up, but if I'm investing all in, might be sad. Okay, 4. So it broke out or trying to break out. If they can hold 60 and take out 75, again, they can get to 88 or higher. I think there are a lot of sellers above 76, so I don't think that's doable, but it's available. So if I wanted to get long and I'm not long, that's not my entry. I would buy it on dips into 60 at least. I don't know much about the company. Actually, I don't know anything about the company. Nothing. Yeah. So this is your trigger up, and this is your buy the dip area with stops. FRC, the chart is not going to help you. It's either out of business or it's not. Plain simple. I made a mistake trusting it, and I still have 20 days on my mistake. If I buy it back now, I would have lost, I think, 100%. So what does that mean? I forgot. I'm going to round $170, and I think I'm down $170 per contract. So, but if it closes here, if it closes above 10.5, I'm rounding, I'm okay. I'm broken even in the next month, let's say. Okay. After that, I don't want to touch it. I don't think it can go back. In fact, it's probably guaranteed it's not going to go back to 80 or 70 or 60 or 40. But is it out of business or not? That's the question right now. And it could be out of business. So chart not going to help you. Fiverr. Okay, so if you consider the last year, you're in a support zone. You have support here, support below it 3 times. This was my scenario at one time, and it came to fruition. Now, it's sad that they lost 37.50. So now going into 35 or 36 is a seller zone that they need to survive. You can see it here. Rallies into this clunk from here on down is going to be difficult to overcome. Okay, support below 32. Like if you lose this one, you're going to fall into 30. That's the better entry point from a chart perspective. Now, make sure you know the earnings. February, so like May, yeah. Around May is going to be tricky with earnings. The concept is good. You just have to study the company fundamentals. The P&L is not so bad. You sold puts at 7 in what? FRC? Yeah. I sold some in 5, but I've closed them to lower my entry point in the 12.5 that I sold. The sold puts for me on FRC were 12.5, but I collected $1.70, and I sold some other $5 puts, and I closed profits on those worth of 40 or 80 cents. I can't remember. So I lowered my break-even point on the 12.5 even lower. So I'm maybe even single digits break-even. Okay. Google. What did they do? Come on, Nick. Yeah, they sell toilet paper. Bard, yes. Not an obvious entry point into this giant failure right there. Better on a dip. I did share a long Google trade that worked out, a credit put spread, I believe. 1 or 2 of them. It came under fire for 1 week. If somebody didn't do anything, they won. If somebody rolled it, they won. So, listen, fundamentals matter, and this one has great fundamentals. And they're going into AI as well. My problem with AI is we're brewing stupid people. That's what we're doing. Go back and watch Idiocracy. You'll get the point. You know, back then, 15 years ago, 20 years ago, whenever that movie came out, I was like, that'll never happen. What? It looks like it's happening. Because the less we think for ourselves, the more our brains go to sleep. Same with our bodies. You know, you don't move around, we're going to get fat. You don't think, we're going to get stupid. Simple. So keep your mind sharp. All right, Home Depot. Good company. I did share a long, I believe I still have it, a credit put spread. Yep, it's down here. So I'm not very safe in it. Very safe. Because look at it, they're selling it. So rallies will be met with sellers. As long as they hold last week's lows, this should be super uneventful. And even if we lose that, we do have buyers. Now, if we have a problem in real estate and loans and whatever, Home Depot sales will plummet. So be careful. If I'm long, I'm not adding. And if I'm getting long here, I could get a rally to 292 and 96 and 300. I would exit. They will sell rallies. I don't know what this is. Helen of Troy. Okay, I've heard of the company. I just don't know what they do. Probably software. Personal care and household products that operates through the following segments. Okay, so it's a COVID stock. Your inside support, God help you if you lose that level. If you lose 83, you're probably going to the 60s. What? Yes. All right, because let's look it up. Good grief, yeah. You don't have any recent, I mean, there's no signs of us losing this level, but it'll be 60s. P&L is okay. All right, Hood. Proud owner of 100 shares, upside down 6 million %. That was a mistake on my part. I forgot that I had a sold put in the money. I got assigned years ago. Okay, so you do have support. I would sell rallies. If it gets up to 9.23, they're selling rallies. So do that until they find a floor. How will I know they found a floor? If they can get above this and hold, then if they can get above this twice, then they've done it. So don't trust the rallies. I would not trade this stock at all. Their income is weird, and fundamentally they need a buyout. That's the honest truth. I'm hoping somebody will buy them out. HSI, I think somebody said HSI inverse head and shoulder somewhere. I don't see it, so maybe you can let me know what you mean. Maybe it's a different time frame. This is a 1 hour, so I'll go to 30 minutes. What do you see? So what I see is a little breakout from here, and it needs to come down here and test the breakout neckline. So this is a good entry point down here, 19,350. They left a gap here. They usually, 20K. No, this is 20K. What do you mean? 19,500. 19,350 would be great. And if they lose 18.8, they go to 17.6. What? Yep, that's what happens. Okay, IEP, Icon. I would never invest in a stock that has the name of the guy on the front door. Okay? Because if Icon goes away, and he's like 1,000 years old anyway, if he leaves the company, says, I don't want to do this anymore, I'm going to go enjoy the rest of my life, what happens to the stock? From that perspective, that is a headline. What is this? Is that a special dividend? Yeah, I wouldn't touch this stock, personally. What are you investing in? Some guys, wouldn't I just be... Yeah, it's not for me. I mean, the guy is brilliant, no doubt about it. You have support. If you lose 50, I don't think this holds, to be honest. If you lose 50, I think it loses the October support. But it is structured like the S&P. It's fighting for current support, and below it is the October support. So from that perspective, I would be rather long the S&P, to be honest. Okay, this one, what is this? I3 Verticals. Wonder what they do. Okay, you have a $22 neckline that is very sharp. Look at it. Breakout, testing for footing, and testing now for footing again. The problem is that they lost this. So I would be more comfortable if this company, goes back to 25. Otherwise, I think you can bleed lower, and they will sell rallies. So if I get a rally and I'm trading it, I would exit, because they might bleed and fall below 23 and come down into the 20s, low 20s, like 20 or 19.8. So be careful. Intel, I believe that is the last stock on this video, and then we will stop recording and hit the second video. Okay, so Intel, suddenly it found relative strength inside the market being crappy. Up here, I don't want to touch it. I thought it was a great company until the management came out and said, oh, we suck. We're going to suck for a long time. We don't have an idea what we're doing. And then I said, all hands off of Intel. And that was the bottom in Intel. So they shook me out. That means they ran out of fans, which they had like 3 fans, and I was one, and I fell out. So if you want to get back into it now, do it on your own risk. I think if the market's rallying, Intel's rallying. So screw you, Intel. I'm not going to invest in you anymore. But it is a giant. It is the largest brains company on the planet as far as computers. So maybe one day they'll wake up and new management will step in and do their thing. You got assigned way early on sold puts on Intel. What level? You mind sharing? 40. Yikes. Okay, so there's a breakout for you, Ed. Above here, if the markets rally and they get above 31, you could inch towards 40 quickly. So figure out what calls you can sell covered that break you even. So you could sell below 40 as long as you're broken even. So like if you sell at 39 and you collect $1 and it goes through 39 and you get called away at 39, you broke even. So thanks for sharing. I appreciate you. Okay, stopping the video.